Joining me now is Jandre Pieterse from Umthombo Wealth to give us his take on markets activity. Jandre, thanks so much for your time. So markets are pretty downbeat, the tech sell-off as well as fading Fed rate cut bets really weighing on sentiment. How are you positioning yourself at the moment, buying into the dip or playing it safe?
Hi, darling, and thanks so much for having me on your show. Yeah, I think seeing a lot of volatility in the markets in this backdrop. Certainly the prospects for December rate cut are diminishing by the day at the moment, given some of the Fed members have expressed concerns about inflation. We'll have to see how that also comes out in the data. I think for me, it's probably going to be bifurcated two ways here. I think the growing prospects of rate cuts diminishing is going to weigh on precious metals, especially gold from here.
Yeah.
Where I think the dip that we've seen, the broad-based selling in resources probably opens up a bit more opportunities to buy into the likes of diversified miners on the back of this weak Chinese data release that is really more rear-view mirror focused, and I think creating lower bases going forward. And whilst we're also seeing some more progress on the trade and tariff front, I think that bodes well for global growth and global manufacturing picking up from here over the next 6 to 12 months. So I'd say that's how I'd broadly be positioned in that regard.
And I mean, you mentioned, commodities pulling back, and looking at that JSE picture, the resources taking the biggest hit, down 2.5% this afternoon. Let's look at data. You touched on data. There are concerns about what inflation looks like. There's also concerns, of course, of, the softening job market in the US. In terms of the October prints in particular, as that US government shutdown has come to an end, there have been worries around that, whether we'll actually even get the numbers and whether we can rely on those numbers. What are your thoughts around that in the greater scheme of things? Do they matter at this point when it comes to those policy decisions moving forward?
It's a good question, and I think it's hard to say. I think the markets are starved for data at the moment, and will want to reach for anything that we get from here, which should come out in coming days and weeks, at least whatever does get released ultimately. But I think at the same time, the data is also going to be noisy. If you think about from a employment or unemployment perspective, and all the moving parts we had during the government shutdown, it is going to be hard to completely make sense of that and read that as sustainable going forward. So I think ultimately that is going to cause more uncertainty about that rate cut in December. I think there seems to be growing dissent on the Fed. So I certainly wouldn't be betting on a cut at this point.
Now, the prospects of not having another cut from the Fed also seeping through to local markets. We had a rally earlier this week. I mean, local markets have really been trending higher, trending strong on the back of higher commodity prices. But it was interesting to see this week that rally really being fueled by SA Inc. stocks on the back of, optimism around the midterm budget update we got on Wednesday, right? There's also positivity around that upcoming credit rating upgrade by S&P Global later today. What are your expectations on that front? It seems like markets, initially it seemed like markets had already priced in an upgrade from S&P.
That's a good question. Always hard to take a strong bet on these binary events, but I would say for me it looks like on balance of probability we might get an upgrade. I think it'd certainly be well deserved. I think the update that we got earlier this week from the MTBPS was certainly everything that a rating agency could ask for. I think the progress on keeping inflation under control, low inflation target, smaller deficits going forward, tax revenue surprising to the upside given the strong commodity price backdrop, strong ZAR. I think all of these things bode pretty well. So I think there's good prospects of it. But I think all of that ultimately does put South Africa in a much stronger footing. So we'll see where it comes out, but I think it certainly is a positive backdrop for country risk for SA as a whole, and that does bode well for SA Inc. equities and banks in particular that can get dragged up by this kind of upgrade.
And quickly before I get into your stock pick, while sentiment is positive here at home, we can't say the same for China, right? With a raft of data pointing to a downturn in economic activity. Are you concerned about growth on that front? I mean, you look at some economist expectations, and many are saying, you know, we need to look past the data we are seeing now. That economy likely to still hit the 5% target by the end of the year. But there's also concerns around whether lawmakers and policymakers will continue to pump in stimulus into the economy to help growth.
I think the data release certainly wasn't very strong, and I would say that was what one could kind of expect. I mean, ever since we had the so-called Liberation Day from President Trump in April, that the ratcheting up of tariffs and trade tensions was certainly not going to bode well for a very export-driven economy and global economy as a whole, and especially from an export and manufacturing point of view. And we've seen industrial production growth slowing from about 7.5% in March. Prior to this, now down to about 4.9%, which is quite a slowdown, and likewise retail sales growth halving from about 6 to 3% in that same period. But all of that, I would say, is, again, this is rear view mirror facing, and I think this backdrop is what Chinese policymakers were also looking at and feeling the pressure to start to come to the bargaining table with the US, and ultimately why we are starting to see some progress in that regard. And I think from here on forward, we've got lower bases. We've seen progress in tariffs and trade deals being reached around the globe. We've had some progress in South America and Latin America as well in the last few days. So I think from here on out, we've got low bases and things will look much more positive, as well as a little bit more extra impetus for China to stimulate. So again, I think that's a decent backdrop from here on forward.
All right, against that backdrop, where are you seeing value at the moment? We've got about 20 seconds for your stock pick.
My stock pick for today is South 32. It's a diversified miner and predominantly exposure to base metals, especially aluminium, as well as copper and zinc. And I am quite bullish on our outlook for aluminium. China was by far the biggest driver of supply growth over the last decade. They've now reached the 45 million ton capacity cap, and therefore growth cannot really continue from here. The rest of the world looks unlikely to be able to take over the baton in that regard. And we're seeing Chinese net exports of aluminium slowing down 40% year on year. That's really going to start tightening that market. And we've got structural demand tailwinds from the likes of switching from plastic to aluminium, grid spending, etc. I think South 32 as a whole is very cheap at the moment. I think its growth prospects are not being priced in. It's got growth projects in the US, and I think in the current critical minerals environment, the US is the best place, one of the best places to build mines at the moment. You're going to be seeing easier permitting, potentially even grants, etc., and fast tracking. So I think that's not being priced in at the moment. Got a strong net cash balance sheet and looks very attractive to me.
All right, South 32, what to look out for. Jandre, thanks so much for your time and insights this afternoon. That was Jandre Pieterse from Umthombo Wealth.